If a stock is selling off or if an index is selling off, there are a lot of ways to decide when to take a long position when it starts to reverse. What I've found works the best for me, and I learned this the hard way, of course, and that is, sometimes I would just take long positions at specific key levels. Like on this example, I'm showing like a previous day high that I use as one of my levels, and just trying to take a long at those levels. The problem is, without getting some type of confirmation, a lot of times I would just get smoked, right? Price would just smoke right through that level, and I'd be like, okay, that was fun, and I'd take a loss. What I've found works better is waiting for a little bit better confirmation. And so what I look for, if something is selling off, like I'm showing here in this example, I want to see a pretty aggressive bounce, and then I want to see it sell off again and fail, and then kind of resume with a decent resumption on the way back up, for example. And so I would enter once it starts get a failed sell off and it starts bouncing again. So that's where I would look to take a long after we're seeing a big sell off. I also like to do it around a key level, like a previous day high, a previous pivot point, pre-market high, pre-market, whatever it is, some type of key level where the market has reversed in the past. And that's kind of what I use as a key level. And so that would be kind of the setup that I'm looking for before I would take a long if price is starting to sell off.